Welcome back. Let's take a look at markets before we get back to Lenka Martinek. She's got some great ideas for investors on the theme that food prices in the U.S. are likely to rise. Some stocks to short and some stocks to go long on as well. Here's a look at the U.S. futures market. And we just want to return to our top story, where the S&P 500 is. I'm going to give you some exact numbers. You can see the contract is at 5,888 points. The close yesterday on the S&P 500 was 5861. Keep that number in mind, 5861. On November the 6th, after the election win of Donald Trump, it was at 5929. So the S&P 500 now trading at less than it was priced at 1 day after the election of Donald Trump. Of course, the election took place after markets closed on November the 5th. On November the 6th, markets were able to react to the election news. Investors sent the S&P 500 up substantially on the back of that Trump election win. It closed that day on November the 6th at 5,929 points. We closed yesterday at 5,861 points. So the Trump rally has melted away. Here's how major Asian markets concluded the trading day. We'll take a look at Tokyo. At the top of the screen, down by almost 3%. Hong Kong down by almost 3%, more than 3%. And the CSI 300 in Shanghai down by nearly 2%. On the year so far, those markets have performed as follows. The Nikkei down by 7%, so it's off to a weak start this year. Hong Kong, despite the sell-off you see on your screen today, Hong Kong is up 14% so far this year, and the CSI 300 is down 1% so far this year. Here's how major European markets are trading right now. Bit of a mixed picture. London is up by 1/3 of a percentage point. The CAC 40 and the German DAX index are down on a year-to-date basis. London up 7.5%. Paris up 9.3%. Frankfurt up 12.7%. So the European indices are off to a fast start in 2025. Let's go to the S&P TSX Composite Index and see where it closed yesterday. Down. Was the answer. It was down by 94 points or so, and just going to check that number. That's an incorrect percentage change. The percentage change was 0.8 of a percentage point. The number you see on your screen is incorrect. We apologize for that mistake. Here's a look at the biggest winners and losers yesterday on the S&P TSX Composite Index from a percentage standpoint. Superior Plus up by 11.5%. Varen, the energy producer, up by 9.4%. Aya Gold and Silver fell by 7.3%, and Energy Fuels dropped by about 9%. That's a uranium company. Let's go now to our guest, Lenka Martinek, for her views on Trump and food inflation. You've got some interesting thoughts, Lenka, on where food prices are going based on some promises made by Donald Trump, and how investors can play that theme both on the short side and the long side.
Yeah, so we have had this view in our company that something we talk to clients quite a bit about, the likelihood that we are in a structural uptrend in food inflation. And this is really directly related, as you know, Paul, we do a lot of work on sustainability, on climate change, and this particular idea is really coming from a view about climate change. So let's step back just for a minute. In North America, households currently spend about 15% of their overall budgets on food, whether that be restaurants or in home. If we go back 50 years, that number was about 30%. So almost by any metric, we can say that food today, or food in the 2000s anyway, up until very recently, was quite cheap. Whether it be whether we're eating out or whether we're eating in. But that has really started to change. That started to change a lot because of climate change and how productive our cropland is. So we can talk about some of the surges that we've seen recently, obviously Florida oranges, coffee, cocoa, olive oil, the list goes on. The most recent one obviously is egg prices coming from the avian flu in the US. All of this is really tied to biodiversity loss and climate change. So that's setting the stage. That's why we have this view that we think food prices are going higher in the future, just simply because we have to deal with all of these physical threats. But on top of that, we have U.S. policy right now that is really very misaligned with bringing down food prices or inflation in general. So we can talk about immigration. If we look at the statistics for coming from the U.S. Department of Agriculture, about 50% of crop farm workers are unauthorized. So immigration policy in the U.S. obviously is a pretty massive headwind to bringing down prices. We simply will not have enough workers this summer to properly farm. So number one is as I mentioned, immigration. The second one is RFK. In many respects, this idea about having a much healthier food supply is very, very interesting to us. But in the short term, he's got this sort of war on pesticide in the background. And again, this is sort of, I think, something that is an excellent long-term goal. We know that in the U.S., pesticides used per hectare are much higher than in other countries. And so to use less pesticides long-term is really great. But in the short term, what that does is, of course, bring down crop yields. So again, we have policy that is going in the opposite direction of bringing down prices, which I think is important. And this is going to play out, we think, in a fairly short period of time. So that's the policy backdrop that's bringing us into 2025. Tariffs on food, immigration pullbacks, and this pesticide story. So what can investors do about this? We've taken the approach to look at a short versus long portfolio. Some of our favorite shorts are in this sort of ultra high processed food environment, and ones that are really coming under pressure right now because of certain food commodity prices going up. So Hershey's, Mondelez, these are the types of companies that we think are getting hit both from a policy perspective and as well from just a simple input cost perspective. We think those stocks will continue to be under pressure in 2025.
So you think those are shorts? Are you shorting those on behalf of clients?
We do. Currently we have Mondelez as a short position in our portfolio.
Go ahead. I interrupted. Go ahead.
No problem at all. And so then on the long side, so if you do think that you want to get involved in this from a long perspective, what are the companies that are going to be able to pass on or to benefit from rising food prices? On this side, we really take a page from the playbook from 2022 in the at the end of the COVID period. Remember, we had that period where grocery stores did incredibly well because they were able to pass through a lot of the pricing onto the consumer. Unfortunately, it's not a great story for consumers, but we do see that the profit margins of grocery stores in these types of environments when input costs are going up do manage to stay quite stable. Currently, you are paying for that stability. So we know, like, for example, in Canada, you have the Loblaws, for example, trading at over 20 times earnings. So it's certainly not a cheap environment for these stocks, but it's, I think, somewhere where it's very nice for investors to be able to hide during a rising food price environment.
And so you like the Canadian grocers at this point, not just U.S. grocers, but Canadian grocers?
Yeah, well, so the strategy for us would be to look at the companies that have a relatively lower PE. So Empire, for example, is one that is a little bit more interesting from a valuation perspective. The idea here is we're very cognizant that you're paying a lot for a grocery store right now, but we think that if there's this whiff of food inflation turns into something much more much larger, it's going to pay to own those stocks.
That's Lenka Martinek with some fascinating views on food inflation and how to invest both on the long